So will the UAW strikes affect Tesla stock? And if it does, will it make Tesla go up or down? Comment below on what you think, because today, September 30, there was some news about what Elon Musk said. He made a warning about the UAW strikes. If you're not familiar, UAW is the United Auto Workers, and Elon Musk issued a warning here. You can read all about it, and it looks like this is not a very positive news for Tesla or any of the major automakers. Okay, but as usual, we want to take a look at the data, right, to see what is going to happen in the short term this coming week for Tesla. And so that is exactly what we will be doing by looking at the unusual options activity data as Tesla trades at 250. So let's get to the options time and sales tape right here. So yesterday, Friday, September 29, you can see this here. We saw these 6,122 unusual options. This is for the October 6, 262.5 strike calls. So they were selling these. And if you sell these calls, each of these calls that are being sold requires a buying power of $9,000. If you want to find out how to calculate buying power by selling calls, we'll put a link at the top here. We've made a video, a very quick, simple method. You can watch that to learn how to do that. But here's a quick calculation of the total value of this trade here, $9,000 per contract to sell a call. There was 6,122, so this is $55 million of buying power required for this trade here. And when we take a look at this trade, this is October 6th, this is this coming week, 6 days away. So you can see that the 262s here, volume 14,800, open interest 3,861. The fact that the open interest is less than these 6,000 unusual options means that these are opening trades, and we believe these are being sold to open. So they're selling these to open these. And if you analyze the trade, you can see that this is not a very bullish trade, right? You can see how if Tesla's stock currently at 250 goes up too much, it will start to lose money. You see the negative, that's a loss in the profit, because on this y-axis here, this is the loss below zero. If it's above, then it's a profit. And so as long as Tesla stays below this break even here, which is about 265, then selling these calls is a profitable trade here. Okay, so it's slightly bullish, but not so much, because it is essentially almost like selling a covered call, right? It's not necessarily very bullish, although you could still be profitable even if Tesla goes up, if you have underlying shares and you were selling these calls. So it's not very bullish, but it's also not very bearish as well, if you had the stocks, right? So that's the thing. The thing is that if somebody was very bearish on Tesla, though, they would have most likely bought puts, and instead of selling calls. Selling calls is more of a hedging type of strategy. And so you could see if they had the shares in Tesla, usually it's 100 shares for every one option contract, because that's the leverage that one option has over the number of 100 shares of stock. You could see that the price of Tesla, as it goes up, even if they had sold those calls, they would still be profitable, except there would be a limit to their gain here, right? So it's not, that's why it's not very bullish, because if it were to go all the way to 300, you could see that this is not increasing higher for them. So that's, they're giving up all those gains by selling those calls. So their stocks would not be gaining. So that's why this is not a very bullish type of trade here. All right. So comment below, what do you think about the UAW strikes? Do you think it will affect Tesla negatively or positively? And where do you think Tesla will be after a week from now on October 6th, when these options expire? All right. As usual, please smash that like button. Subscribe if you haven't, and hit the bell icon. You'll be notified whenever we detect unusual options activity. Take care, everybody.